I think it's important for the audit committee to understand the business firstly and understand end-to-end how does the different facets within the business impact overall the profitability of the company. Where previously the focus was very much on financial requirements for the audit committee, it's a much more holistic view now in terms of the sustainability of the company as well. So taking that into account and make sure that there's proper governance within the organization so that the business operate responsibly and make sure that it not only make a profit, but make a profit in a responsible manner going forward.
Our business model is based on operating in various environments with various inputs and various outputs which affect not only our customers but affects communities, affects our shareholder in terms of our shareholder mandate. And integrated reporting has helped us to be able to communicate all the aspects of our business in terms of what our inputs are and what our outputs are, and then eventually what the outcomes of our activities are.
It has changed since we started doing the integrated reporting. We've got now what I would say a single way of thinking for the whole business. And our risk mitigation strategy, it integrates all. We look at all the facets, not just the financial. As in the aviation business, we're looking at, for example, like with the noise abatement, with the emissions. So the efficiency is not just the efficiencies of the aircraft, but also from how we provide our operations. So in terms of our strategy, we've got 3 pillars of which integrate the whole reporting, of which we have to address the governmental requirements as well as the international requirement from the United Nations perspective.
I think the financial information is very important. However, the integrated report tends to look at the other elements of the business. So in the past, you would have had the financial numbers, your income statement, balance sheet, the notes, then you could do your analysis. But I think with the integrated report, you start to look at the business wider. So if you look at the way we do it, we look at the different sustainability dimensions of the organization. We look at the financial dimension, obviously, but we would look at our customer dimension. We would look at human capital. We would look at we're busy with a very big build program where we'll be spending a lot of money over a number of years. We look at that and the impact in the socio-economic aspects of the country. So you would look at much, much wider than just the financial numbers that you could analyze. And I think it gives you a much better context of what the organization is about, what is the impact of the organization, and I think it helps the user to do much better analysis of the information.
An often asked question is how the integrated report fits into the corporate reporting structure of a typical organization. And the way we explain it is using the analogy of an octopus. So the head of the octopus should be seen as your integrated report that tells your value creation story in a concise, understandable, and easy to read manner, which can be read by anybody. If you want more detailed information, you would travel down to one of the arms of the octopus, and that would be your annual financial statements, could be your sustainability report using the GRI, remuneration, corporate governance, etc. So sustainability reporting will always have a place as one of those arms, and it's up to the organization's choice as to whether they use the GRI or not.